Director, so go ahead, Jeremy.
Thank you, Your Honor and Council. As the Mayor mentioned, this is the proposed budget and levy property tax information meeting. So some of the things that we'll be going through tonight is providing an overview on legislation that affects the property taxes and our 2023 proposed budget, as well as presenting a summary of the market value and tax capacity that's utilized to calculate property taxes, review the proposed property tax levy, review the budgets for the 2023 general fund, special revenue funds, capital project funds, debt service funds, and our water, sewer, and stormwater enterprise funds budgets, as well as announce the next steps to adopt the final levy and budget. And then finally, providing an opportunity, as the Mayor mentioned, for public comments. So starting off with legislation that does impact how property taxes are calculated. Property tax rate calculations are the same as they've been in the last few years. For residential homestead values, it's 1% of the first $500,000 of market value, and then anything above $500,000 of market value is calculated at 1.25%. For residential non-homestead, including single units, first $500,000 of market value is at the same 1%. For duplexes, triplexes, and vacant land, it's calculated at 1.25%. And for typically apartments with 4 or more units, it's at 1.25%. For commercial industrial rates, those are the same as they've been in the prior years. The first $150,000 of market value is calculated at 1.5%, and then anything over $150,000 is at 2%. The state does also impose a state property tax on commercial industrial properties, and that's estimated at approximately 34%, and that's utilized for general education. For that state property tax rate, however, the first $100,000 of a commercial industrial valuation is exempt from the state property tax. Some of the other things that are utilized in calculating the levy as well as the budget are local government aids that are received by cities. The city doesn't receive any local government aid. We haven't received that for a number of years. The market value homestead credit was a program that temporarily was in place and reduced from 2003 through 2006. And then it was eliminated almost entirely with the last recession in 2008 when the state government was reducing their budgets. And in 2009, you can kind of see just the roller coaster here of those reductions that have occurred. Finally, that was eliminated. That credit program was eliminated in 2011 and replaced with a new homestead exclusion program. So that new market value homestead exclusion program excludes residential homestead property taxes by excluding a portion of that valuation from taxation. And in that formula, the exclusion is equal to 40% of the first $76,000 of market value on a home, and then it begins to phase out by 9% of the market value over that $76,000 amount until it reaches zero at $413,800 of market value. This is really important, as we've seen, and I'll show in the next throughout the evening here, the significant valuation increases that have been occurring on residential values that have pushed a number of properties above that $413,000, where they're not receiving any of that market value homestead exclusion anymore. So the state no longer pays a share of the tax as they did under the previous credit program, but now homesteads are subject to less taxation because of the values that are being reduced initially in the calculation. So if we kind of look at the city's makeup of our estimated market value or our preliminary tax base for the city for payable 2023, you can see about 53% of the overall valuation is homestead residential at a little over $766 million. The next classification is commercial at about 25% with a little over $334 million. And then to a lesser degree, you kind of see apartments at 8%, residential non-homestead on the bottom at about 6%, industrial being about 1%. So next, looking at kind of a 10-year tax capacity trend for the city of Baxter. We started off going back 10 years, 2014, a little over $10 million in tax capacity. This is really our tax base after those calculations are performed on each individual property and then added all together. That's grown a little bit over the years, a little bit of a dip in 2016, or a little bit lesser of an increase, I should say, and then a significant increase that's occurring in 2023, where we've jumped from about $13 million of tax capacity to a little over 16 because of valuation increases. So next, to calculate the actual property tax levy and how that's calculated, if we look at our proposed operating levy for operations, which is proposed to be a little over $6.6 million, and our transfers to other funds for operations at $622,000 for a total levy of $7.2 million, including a debt service levy of $1,076,000, to result in a total proposed property tax levy for 2023 of $8,304,500. And this is reduced by $200,000 from the preliminary levy that was adopted back in September. The council's made some additional reductions in the meantime. So what you'll see on your proposed tax statements for next year isn't reflective of that additional $200,000, but the levy is proposed to be reduced from $8.5 million down to $8.3 million. So then if you look at what our tax base is, that's net tax capacity for 2023, the preliminary figure is that $16 million figure. If you take the $8.3 million levy divided by the $16 million tax base, you come up with a proposed tax capacity rate of 51.68%. And that's down just slightly, again, because of that levy reduction that's being proposed from almost 53% down to 51.68%. In comparison, looking at last year's proposed property tax levy of $7,739,000 and that lower tax capacity of about $14 million, we had a tax capacity rate of 57.5%. So the tax capacity rate is dropping from about 57.5% down to 51.68%, and that's just part of the formula. The other part, of course, is the valuations of each individual property. So if you look at the net levy increase from 2022, it's $565,500, or about 7.31%. That's down from that 9.9% that's shown on your proposed property tax statement because of that proposed $200,000 reduction in the levy. So this graph just kind of shows a little bit the history of the total levy for the city of Baxter, including debt service levy. The debt service levy has been pretty stable at $1,076,000, and with the proposed operating budget increasing over the last 10 years or so. So the 2023 proposed levy of $8.3 million is an increase of about $2.8 million, or about 50% over that 10-year period. During that same period, inflation has increased about almost 28%. So now kind of looking at a little bit of how that impacts individual valuation properties. The next few slides show that in two different ways. One's assuming there's no valuation change in residential or commercial valuation. The second one looks at kind of that average increase that we're kind of seeing occurring throughout the city. So for 2022, you look at the valuation of various residential homes in the first three columns. There, a $76,000 home, and that's just based on that full homestead market value exclusion of $30,400 being received. And as I mentioned previously, that exclusion does start to phase out until it reaches nothing at $414,000. So you see the $250,000 home receives an exclusion of about $14,700 as that's beginning to be phased out. And that results in a taxable market value when you deduct that from that $250,000 original value home to $235,000 for which the tax is being calculated on. That $235,000 is then multiplied by 1% for the tax capacity rate classification for residential property, or 2353. Then you take that tax capacity and multiply it by the current tax capacity rate, which for 2022, the combined tax capacity rate for the city of Baxter, Crow Wing County, the school district, Region 5, as well as the the Crow Wing County HRA total jurisdictions is a little bit over 117%. That 2353, an example of the $250,000 home, then has a $1,353 city taxes. Its overall taxes were $3,033, which includes those tax capacity rate calculations for the various jurisdictions, as well as the school district has a referendum market value tax that's based purely on the valuation, and there's a tax capacity component to that. So in this example, that school referendum market value tax is $272. So the total taxes on the tax bill for a $250,000 home in 2022 was $3,033. And then you kind of see there's different examples there for those other residential values as well as a commercial valuation, which also includes the state tax rate as well. And the state taxes are included for that total tax on a $500,000 commercial industrial small property of $14,212. Again, this next slide is showing no change in the valuation. So again, assuming those same valuations then for proposed 2023 taxes, that's sitting $250,000 home in that third column, then sees that $14,000 exclusion to arrive at a taxable market value of a little over $235,000. Again, multiplied by 1% to come up with a tax capacity for the property, and then multiplied by the new tax capacity rate of 97.74%. The rate is going down because of the increase in the valuations. So now you multiply that valuation of that property times that new rate combined, you can see the total taxes for that $250,000 value home, again assuming no change in valuation, is $2,502. So in this example, there's actually a reduction in the total property taxes, as well as the city taxes. City taxes would be decreasing by about $138 in this example. However, we do know that valuations are increasing, and that's part of the reason that the tax rate went down, is because as the tax base got bigger, it's partly due to the increase in valuations that are occurring. This is just a summary, I guess, of the last two of the example that I just provided, showing again the change. So on this next set of slides then does show that proposed valuation change, and again, these are just average valuations. You know, each parcel is going to be different, but if we did a comparison of where the 2022 and 2023 valuations were, on average, residential valuations are increasing about 32%. There certainly are some that are significantly more, and there's some that are less. But on average, cumulatively, it's about a 32% increase in residential valuation. That's in comparison to commercial industrial valuation that only went out a little less than 2%. So there is a shift that is occurring where the commercial valuation tax burden is shifting to residential valuation because of those valuation changes that were done back on January this year by the county. Overall, that increase in valuation for the city is about 21%, but again, you can see that the commercial is significantly less than what the residential portion is. So this first table here just kind of shows similar to what we went through in the previous example. This $250,000 house back in 2022 had a total city taxes of $1,353 and total taxes with all the jurisdictions of $3,033. Calculation done exactly the same as what we went through previously. What's different then is if you look at this table, assuming that there are valuation changes applied, so now that $250,000 home in that third column, if that increased by 32% and now had a new valuation of $330,000, the homestead market value exclusion is decreasing as that's getting closer to that $414,000 amount. So you can see it's only $7,465 in comparison to what it would have been, $14,000 previously with a $250,000 home. So it's cut in half, meaning that that taxable market value that the tax is being based on now is jumping from $235,000 to $323,000, in part because of that valuation increase that occurred, but also because of that homestead market value exclusion did not decrease, or is decreasing as the value goes up. So looking at that new valuation, taxable market value of $323,000, multiplying it again by 1% as it's under $500,000 valuation, the combined tax capacity rate, looking at the proposed budgets in addition to the city's proposed $200,000 reduction in the levy, results in a combined tax capacity rate of a little over 97%. Adding in the school referendum market value tax, the total taxes would be $3,425. The city's portion would be $1,669, and you can see that the city's change is about $316, or about 13%, or excuse me, about 23%, the bottom line there, The overall dollar change is about $400 increase in the taxes for all the jurisdictions, for about a 13% increase. And this just kind of summarizes, again, looking at that $250,000 residential property, it increased to $333,000. You can see that the city taxes increased from about $13.53 to $16.69, or about 23%. Again, based on that valuation increase that's happening more significantly on the residential side than it is on the commercial side. So looking at the tax capacity rate by jurisdiction comparison with the 2023 proposed to the final, you can kind of see the various rates that were in effect for the 2022 taxes to arrive at that 117% in comparison to the 2023 proposed for the various jurisdictions, including the proposed reduction in the levy for the city, results in about almost a 20% increase in the rate reduction, part of that formula that's used to calculate the property taxes. It's made up of about 48% of the taxes on a $175,000 home is attributable to the city of Baxter, about 29% to the school district, and about 23% to Crow Wing County, with just a small amount to the Crow Wing County HRA as well as the Region 5, the other two jurisdictions that impose property tax levies. This table just kind of shows the impact of the valuation shift, as I mentioned, that's occurring. Even if the city did not increase the city levy from 2022, so in other words, there was no increase in spending, the valuation shift occurring from commercial and industrial to residential still results in a property tax increase for the city's portion of the property taxes. So looking at that $250,000 house example, again, if it did increase by 32% to $330,000, the proposed property taxes increased to about $1,556 or from $1,353 where they were in 2022, or about a 15% increase. So again, this is just kind of showing how that shift is impacting the valuations. Even if there wasn't any increase in spending or no increase in the city's levy, there still is an increase in property taxes that would occur because of that 32% increase on average valuation increase. So next, looking at the city's budget for 2023, this pie chart just shows the various revenue sources for the city's budgeted funds, which, as I mentioned, include the general fund, special revenue funds, capital project funds, a debt service fund, as well as the water, sewer, and stormwater enterprise funds. Property taxes do make up the majority of the city's revenues. We don't, as I mentioned, we don't receive any local government aid, so the intergovernmental revenue at 8.1% is fairly low for a city, especially in outstate Minnesota. Typically, cities have LGA as a revenue source that sometimes equals or exceeds their property taxes. Intergovernmental revenues in this case are more dedicated to specific things, such as the gas tax that's used for certain streets. There's certain police state aid that's attributable to some of the police funding. But there isn't any general intergovernmental revenue that the city receives from what other cities potentially may receive. So the next highest revenue source would be charges for services, and that would include our utility rates and our water, sewer, and stormwater enterprise funds, as well as fees associated with building department, with the exception of building permits. Those are included in the 1.4% below. The next category then, of course, is local option sales tax that is dedicated towards specific capital projects. So those three make up the three largest revenue sources for the city, and then you can kind of see there's some other revenue sources there as well. So then looking at the expenditure side of the equation, similarly for the city of Baxter for proposed 2023 budget, public safety makes up about 14% of the budget, just right behind debt service at about 16.8%, and that's followed by general government and the three utilities, so the water, sewer, and stormwater. So for 2023's proposed budget, we have total revenues, net of transfers, of about $21.8 million, and total expenditures, net of transfers, of about $22.3 million, or just under a $500,000 decrease in fund balance. And that decrease is attributable to a number of things. A lot of it's just, is just timing on collection of sales tax proceeds from when projects are done, as well as the special assessments that come in for debt service and capital projects, and then not fully funding depreciation in our water, sewer, and stormwater funds. In addition to that, just utilizing cash on hand for any planned capital projects that may be occurring. So the first fund that we do budget for is our general fund, and this is makes up a majority of the operating budget and fund for the city. For 2023, we have a proposed general fund revenues of about $8.46 million, and again, property taxes makes up a majority of that for the city. And then we have some transfers that are coming in from other funds at $404,000, followed by franchise fees that are utilized for street maintenance, and charges for services at $173,000, and then some other various categories there as well on the revenue side. On the expenditure side of the ledger, proposing a balanced budget with general fund expenditures of $8,460,600, which is equal to the revenues. The largest component within the general fund is our police department at almost $2.7 million. That's followed by streets and street lighting at about $1.4 million, and then third, parks and grounds maintenance at $1.2 million. So then looking specifically at some of the expenditures by department in the general fund, we have our general government, so we have some various funding things highlighted here, including funding for the Senior Center, the Initiative Foundation, and the 4th of July celebration. $50,000 for City Hall building maintenance, $55,000 for property and liability insurance that isn't specifically allocated to other departments. And then within our council, administration, and finance departments, we have $7,000 for human resource services, $21,000 for a portion of the audit and financial advisor services, and $15,500 for software annual maintenance. In our legal allocation, we have $18,000 for the city attorney and $60,000 budgeted for prosecuting contract with the city of Brainerd. Then looking at some of the other departments within the general fund, our information systems or our IT department, we have $10,000 for network reconfiguration consulting, a little over $25,000 for our geographic information system for mapping and other various city network software maintenance. Within Public Works Administration, $25,000 of general engineering services, and about a $3,000 differential on an intern that is partially funded by Sourcewell. In the police department, $40,000 budgeted for fuel, $33,600 for software maintenance, and that includes body and squad cameras, and $16,000 for other equipment, $5,800 funding for the K9 program, and about $34,000 for animal control contracted services. We contract with the city of Brainerd for fire protection, and that amount for 2023 is about $355,040. In our streets and street lighting department of our general fund, we have $23,000 of personnel services that are increasing due to some restructuring that's occurring in the department, and that includes adding a position that's shared with the stormwater fund later in the year. $7,700 for seasonal staffing, $30,000 for street sign replacement, $25,000 for fuel, a $17,000 increase on contract plowing to $71,000, a $20,000 increase on salt and sand due to higher costs to $110,000, and $165,000 for crack sealing, an increase from $62,000 increase from the current budget, and $36,000 for striping, $20,000 for tree removal, and $50,000 for vehicle and machinery repairs, which is an increase from $20,000. Continuing with streets and street lighting, $62,000 for maintenance of the public works facility. That includes the self-building, netting, and shop floor repairs. $125,000 for miscellaneous street improvement maintenance and repairs, and that includes shoulder work, gravel, bituminous patching, and street overlays of $60,000. And then we have about $125,000 budgeted for various street and signal light utilities and maintenance throughout the city. And then the final two departments, I guess, within the general fund are parks, grounds, maintenance, and recreation. So the Parks and Grounds maintenance, $76,000 budget for seasonal staffing, $73,000 for additional contract services. You can kind of see some various minor equipment and safety nets and landscaping items there. $53,000 for structure repairs at parks, and $24,000 for a mower addition. We contract through a joint powers agreement with the school district for recreational services, and that amount is identified at $20,000 for 2023. And then we have some various transfers that from the general fund to the cemetery, community development, capital parks, economic development, special revenue funds, in addition to that, capital project funds for the capital equipment fund and the municipal state aid collector street fund. We'll talk about those in a little bit. So next, looking at the various special revenue funds for the city of Baxter for proposed 2023 budget, you can kind of see the various revenues and expenditures for those different funds, special revenue funds. And for revenues, the revenues are generated by dedicated sources and fund transfers in the special revenue funds. And that includes things such as cemetery plot sales, building permits, planning and zoning fees, park dedication fees in the capital parks fund, economic development activities in our EDA or economic development fund, lodging tax, which is collected and then remitted to Visit Brainerd as part of the Lodging Association for marketing the area, tax increment financing funds, as well as the sales and motor vehicle excise tax that are collected in the sales tax collection fund. So looking at some of the highlights of the expenditures within the special revenue funds, we have about $16,000 of planned activities in the cemetery. In our capital parks funds, which is funded from park dedication fees, we have about $8,000 for a needs study, as well as $10,000 for the Whipple Beach ADA lake entry project, and almost $35,000 for the annual payment for the property that the city acquired from the county near Camp Vanasset. Community Development Fund is comprised of our planning and building inspection departments, and then with our Economic Development Fund, we have $37,000 budgeted for the Blade services for economic development for the city. In the Lodging Tax Administration Fund, as I mentioned, the lodging tax receipts are collected and then they're remitted to the Lodging Association, and then those are dedicated by statute for marketing purposes. And we've estimated that 95% that's remitted to the Lodging Association to be a little over $426,000 for 2023. Within our various tax increment funds, those are comprised of the city's economic development, redevelopment, housing, and renovation and renewal tax increment districts, and we have about $400,000 of activities identified in 2023. Sales tax collection fund, some of the various expenditures in 2023, including about $584,000 transfer to one of the debt service funds, and that's what's being used to finance the city's portion of the wastewater treatment plant project that the city jointly built with the Brainerd Public Utilities. The city owns 2 million gallons of capacity, daily capacity in that plant, so we're utilizing sales tax to pay for our share of the debt service related to those improvements. $300,000 of funding for the golf course commercial stormwater project. This is a carryover from current budget. $622,000 of estimated revenue sharing with the city of Brainerd for the regional airport project. When the sales tax was renewed in 2014, we did dedicate up to $8 million or 20% of the sales tax that's being collected annually to help pay for the water and sewer that was extended to the airport to provide fire protection at the airport as a regional project. So next, looking at our capital project funds for 2023, we budget for 4 funds, including the capital equipment fund, the municipal state aid collector street fund, the street replacement fund, and the trail construction and maintenance fund. You can see the revenues and expenditures being proposed there. And those are really annual appropriations from benefiting departments to fund capital equipment replacements, more on an annual basis, so that when those things need to be replaced, there aren't huge changes or spikes in expenditures from year to year. As well as proposed funding for the street replacement fund, and it's from the general fund and the municipal state aid fund and the state aid collector fund. Trail construction fund is primarily from general fund transfers. So looking at the expenditures within the capital equipment fund, as I mentioned, it's providing a sinking fund for future capital equipment replacement purchases, and then helps to minimize some of the annual capital expenditure fluctuations that could occur if we were buying some of these things in 1 year and then not buying anything for the next 10 years. So you kind of see some of the bigger items on there. We're proposing to replace a motor grader at $345,000 and a street payloader at $280,000. So we try to save up money each year for those items so that it's not all being paid for in 1 year's property tax levy. And then some of the other items on there include various computer equipment items, some citywide software ERP updates, 2 squad cars are scheduled for replacement, as well as a parks piece of equipment. So our municipal state aid collector street fund, again, this also has a purpose as a sinking fund to provide for future collector street funding on a pay-as-you-go basis, needing us to potentially issue less debt by having cash on hand to pay for those projects. And they include some additional width or lanes or curb and gutter for a street that's collector in nature. And we anticipate using about $500,000 of funding from that project source for the NOAA FDR project being proposed in 2023. For the street replacement capital project fund, this purpose is also to provide ongoing funding source for routine street maintenance, and that's primarily for franchise fees that are collected. So we have about $16,000 of engineering services for trail pavement management, as well as $340,000 of microsurfacing projects that are anticipated in 2023. And then finally, the trail construction and maintenance fund, again, also a sinking fund to help pay for future trail maintenance and construction by leveraging grants with some cash on hand, potentially when it comes to new construction or paying for ongoing maintenance. And we have $85,000 of various trail segment maintenance and repairs being identified for 2023. So the final area that we budget for is our enterprise funds, so that'd be our water, sewer, and stormwater enterprise funds. You can see proposed revenues there, as well as the proposed expenses. And the expenses do exceed revenues, and that's just as a result of not fully funding depreciation charges, as well as having some contributions towards planned capital infrastructure improvements throughout the year. We do have some utility rate adjustments that are being recommended, including a 7.1% increase in water rates, 4% to sewer rates, and 13.1% increase in stormwater rates. And these are monthly user charges, as well as development activity and availability charges that we will continue to monitor just to ensure that we have adequate debt coverage within those funds for where there's debt applicable. So specifically within the water enterprise funds, we have about a $200,000 estimated increase in personnel services, and that's due in part to some department reorganization that has occurred throughout the water, sewer, stormwater, and streets departments, as well as $14,000 for seasonal maintenance staffing, including public works and intern. That's being proposed to be shared with the sewer fund. It should be $5,000 for annual SCADA software subscription, $20,000 for pump, fire hydrant, and other supplies, another $12,000 for contracted mowing services, a little over $30,000 for professional services for that SCADA, which is what's talking to the various components of our water plant and our water towers, things like that, along with heating, ventilation, air conditioning, and generator maintenance. $30,000 for engineering, $55,000 for water treatment plant chemicals, and about $14,000 for water purchases with Greener Public Utilities, and that's just based on the fixed fees as well as some water that we do acquire during anticipated maintenance runs that would be done quarterly. And another $130,000 estimated for electricity and other utilities in water function. About $55,000 for repairs, including water mains, plants, and pond cleaning. We have some scheduled replacements for a dehumidifier, as well as purchase of 3 new fluoride pumps. Some maintenance at the South Water Tower estimated at $60,000. About $1.2 million of estimated depreciation within the water fund. And some of the other acquisitions include $65,000 for a water plant iron analyzer, as well as replacement of the scissor lifts in the plant at $25,000. About $13,000 transfer that's helping pay for some equipment repairs and improvements. And then the $95,000, $180,000 are funding towards improving improvements that would be done as part of the Millwood FDR and the 2023 FDR project, respectively. On the sewer fund expenses, we have about a $1,400 estimated increase in personnel services as part of that estimated department reorganization. About $14,000 in seasonal maintenance, including that an intern, as I mentioned, is shared with the water fund. $12,000 of contracted mowing services, $20,000 of professional services, $800,000 of budgeted treatment plant charges with Greater Public Utilities. It's the largest funding, or excuse me, expenditure side within the sewer fund is the treatment of the wastewater. $62,500 allocated for lift station and other repairs and maintenance, which is up from $46,000. About $1.2 million of estimated depreciation, and that's primarily for the wastewater treatment plant. $10,000 for portable sewer camera kit, and $13,000 transfer for public works facility equipment repairs and improvements. And then $39,600 estimated funding for the Millwood Drive FDR project, and about $240,000 for lift station 13 maintenance rehabilitation, and that's an increase from what we were initially looking at doing that this year of $153,000. So that just kind of shows some of the significant increases that are occurring in the economy right now with the cost of materials. So then finally, the stormwater fund expenses. The stormwater fund was added in 2006, and this is a response to federal and state requirements, including inspection requirements that the cities have to perform. We have a $50,000 personnel services increase as part of that department reorganization, which also includes adding a position that's being shared with the streets department. $60,000 placeholder for a shared tech position, engineering tech position. $95,000 for street sweeping contracts, that's up from $90,000. About $12,000 for ditch mowing, same amount for tree replacement landscaping. $35,000 for engineering, $10,000 for MS4 inspections that are required. $100,000 for repair projects, including pond cleanings. $360,000 of estimated depreciation within the department, and $15,000 for replacement of a mower attachment for the roadside mower. Then some of the funding for various projects include $1.6 million for that Excelsior Stormwater Pond project that is funded primarily with state grants, as well as sales tax proceeds. $104,600 for the Millwood FDR project that's related to stormwater improvements, repairs, and about $52,000 of related repairs on the 2023 proposed FDR street improvement project. So then finally, debt service funds are the last area that we budget for. You can see we have proposed revenues of about $3.4 million and expenditures of about $3.7 million, or net revenues under expenditures of about $240,000. And this is really just due to a timing of revenues that are collected versus when the debt service payments are made. In the interim, we use existing fund balance that's been utilized or collected, I guess, from prior levies and assessments to pay for those until those below. So on the revenue side, we have $1,076,000 of property tax levy for the city's share of the infrastructure, about $1.2 million of estimated special assessment receipts for 2023, and about $717,000 of transfers from sales tax and TIP funds for various infrastructure costs. And then expenditures of about $3.6 million of principal and interest payments that are being made in 2023. So as far as the next steps in the 2023 budget and property tax process, adoption of the final levy and budget is scheduled for tomorrow, December 6th, at the regular council meeting. And as I mentioned at the beginning and the onset of the meeting, and as did the mayor, we are here for public comments, I guess, on the proposed budget and property tax levy.
Hey, Council, excuse me, any questions of Jeremy before we move on? I think, Jeremy, if you would, this has gone very, very fast as we're going to slow it down now, but the explaining of the difference in numbers versus what we had to do in September versus what will be on the actual tax statement, to slow that explanation down a little bit, if you would.
Sure. So we're required by statute to adopt a preliminary levy and a preliminary budget by the end of September. We went through that exercise, and the preliminary levy was identified at $8,504,500. So that's the number that everything's based on, that you'll see in your proposed property tax statements that you received last month, including the proposed property tax rate of just shy of that 53% right here. In the meantime, the city and the council have gone through and we've reduced the levy, or proposing to reduce the levy when the final levy is adopted, by an additional $200,000 from that preliminary levy, which would result in a revised levy of $8,304,000. So that would reduce that property tax rate from about 53% to about 51.6%. The county will certainly go through and do their final calculations. The final rate will be set sometime next year as they put together the final tax statements that go out, but it should drop it from about 53% down to about 51.68%, just based on that tax capacity doesn't change very significantly. So what that does is it's reduced that levy change that we were proposing of a 9.9% approximate increase to 7.3% increase, and that's a little bit more in line. Obviously the consumer price index inflation right now is running at about 7.8%, so we're a little bit shy of that. But as we all know, inflation certainly is eating up some of those costs when we look at higher energy prices, contracted professional services, materials, shipping costs, personnel benefit increases, things like that, certainly do drive some of the increase that's occurring there. But reducing the levy by about $200,000 reduces that percentage levy increase to 7.3% and that rate to 51.6%. So what's built into the calculations here is based on that revised combined tax rate for the various jurisdictions. The 97.7% is based on the $200,000 reduction. So the city's property tax rate of 51.68% or 97.74 combined for the various jurisdictions is based on that $200,000 reduction. Each entity will go through a similar exercise too, so it's possible that these other entities will be looking at revising their final levy as well. The final levy can decrease, but it cannot increase from when it was preliminary set. So when each of these jurisdictions set their preliminary levies back in September, they certified the maximum amount that they will levy for their property tax for 2023. So it can go down from there, but it cannot go up from there.
Okay, thank you. I just thought, we have to start this in July. We don't get our numbers from the county until after we have the deadline that we have to meet with them by the end of September. And so then when all things get shuffled, it could be different. So it can be confusing. If this goes the way it is, you'll get your statement and the numbers won't match. That's why I just wanted him to clarify that. So you'll go, what happened here now, So the number will be better. It won't be good, but it'll be better than this. And so I just wanted a better understanding of that. Okay, we're going to open the public hearing then at 6:44 and open it up to your comments. We just ask you to come forward, give us your name and address, and whatever you'd like to share with us.
Hi, my name is John Ray, and I live at 10800 Red River Drive. And I great job, Jeremy, on the presentation. It was phenomenal. When and still, sometimes if you get all those numbers, it kind of goes crazy in your head. But my taxes went up. The Baxter portion of my taxes went up for my house went up 36%, and that just simply is not sustainable. It seems really unreasonable to me. But I am certainly willing to negotiate. I'm willing to chat. And as you know, in some of these numbers here, click a few things off for me. As you know, I live way to the south in southeast Baxter there, southwest Baxter, excuse me. And the city has now acquired property now with the Mississippi Overlook Park, and which kind of cuts me off from the rest of the city. And it's been really frustrating for me. This last year has been really frustrating with just the lack of the lack of access, and even the idea of having a road that would go through there. We've charted it out. I was on the commission, on the park commission, to look at a road. Also talked with a consultant, went to Minneapolis and talked with the consultant. He assured me that there are places that you can go. They wouldn't cost. I mean, the city would have to do some work. The staff would have to do some work to find to get the right partners. But it wouldn't even cost the city anything. And I would be willing to pay even this if I could get a road that would go through. Because I understand that even though there's the additional, even if it's a minimum maintenance road, one of the things the staff has said to me, well, we don't have the capacity just to do a dirt road. That's all I'm asking for. But something to access that. And the reason for that is that we're having a problem in our neighborhood now, even with relationships. If you remember some of the comments that were made, for those of you who were at the comments, one of the neighbors said one of the values that we see in this area is that we all get along really well. And some of that has a potential of really eroding right now. We're getting a lot of people that are coming back there. A lot of trespassers. We've talked to the city Jim here. Jim's awesome, but there's a limit to what he can do too, because there are other properties that are around there that he doesn't know if they belong or not. And so as far as trespassing goes, at any rate, I would sure be willing to negotiate if you would instruct the staff simply to start looking at doing the road that we looked at, that we talked about at the very start, to get something that goes through there. The other thing the staff said, well, we don't have the capacity. Well, we have a road grader that's literally right down the road from Red River Drive. That we have, my understanding, we have no other dirt roads. That's a $500,000 piece of equipment that we have. That's not that could be used, even if it's just for that to maintain. We have it. We actually do have the equipment. We're just not using it. So that's my sense. Thank you.
Hello, my name's Lauren Bielke. I live 13971 Kenwood Drive in Baxter. I'd like to thank the council for some time today, and I'm here because the large increase in property taxes and the dollar value that we've seen. And the one question that went through my mind as I was listening to this is, why doesn't Baxter get any local government aid? They're in
seen the forest from the trees. Presented a lot of trees. I really don't care that the city spends $12,000 on contract mowing, for instance. Maybe consider the audience. At any rate, taxes, yeah, my property values, estimated market increase was 44%. Baxter tax proposed went up 39%, like the gentleman said before me. It's unstable. You know, it's great if I'm going to sell my house, but I'm not. It's not so good if I'm going to live in it. Jeremy, question. Commercial values fairly went up. Residential values went up a lot. So what's the split with regard to revenues coming in, commercial versus residential?
I don't have that information. I guess the county typically calculates the tax capacity later on the final breakdown. This is just the estimated in the 16 million, so I couldn't tell you, I guess, off the top of my head what that breakdown is.
Well, what we know is that the spread is favored commercial people. They've gone down and then it's come back to the residential people. That's, that part we know. I don't know why, but it seems a little unfair.
Yeah, so at least what I got out of the presentation was commercial barely changed in terms of increase in market value. So I'm assuming then that the tax they're going to pay proposed for next year is going to be relatively flat. Is that a good assumption?
Right, because if you look at the examples that I provided, it actually shows in some cases decreases in what commercial pays because of the shift that's occurring from commercial to residential. Because residential went up substantially higher or more than what commercial went up.
Yeah. 33% for my case.
Yeah.
39.
Yeah, and like I said, the 32% is just an average. I know there are examples out there, specifically lake properties, that are 50 to 60% increase in their valuations.
Well, like I said, it's great if you're going to sell. It's not so good if you got to live there.
Thank you.
I'm a hairdresser. Hold on, me, sorry. Can you give me? So I am commercial residential, and this increase on my homestead, I started out cutting hair in 1978 for $21 for a haircut. No shampoo, nothing, $21. I've been doing hair for 45 years. I cut hair today for $25. You take this 33%, 37% increase, it would put your haircut today at $34.25, and I know there isn't one person in here paying $34.25 for a haircut, because I can tell. I'm just saying, I've been to New York, I've seen $250 haircuts, and we're not supporting it.
You got it.
And
I'm just saying.
that's an insult to you.
I'm just saying, and I don't need a sign at the end of my road. I have a huge following. I have an at-home business, a home occupation. Everybody from home right now is working out of their homes, and they're making 10 times more than I'm making. My taxes went up to take 1/4 of my income this year, 1/4. I still have to pay my utilities, which is another 1/4, so now we're to 1/2. I have to pay insurance, and I have to eat, and I have to maintain my car and do everything that everybody here has to do. And the bottom line is, yeah, I'm a business person. I kind of get, there's a lot of spending going on, and we've been replacing dead pine trees on the little pond over here 4 times, and I could give a rip about, and we've all paid assessments for water and for our new road, and now I wade through my driveway to get to my mailbox because the water comes off the road and goes into the low part, and yes, and I do appreciate the things that we have, but everybody has to eat and live. My mother, she is next door to me, and she is 92 years old. She doesn't get to raise her income. And even if I did, I wouldn't have any clients, because I don't think any of you would come to me for $34 for a haircut. So my mother, she doubled. Her house is 55 years old. Then they put her in a flood zone. I have lived in this area since I was 7 years old. And this whole piece of this, I'm still in business, but you can't spend more than you take in. And you really have to really get lean sometimes and really get creative to hang on. I don't feel our city and our whole agendas are really getting the big picture, because you just can't keep doing this. People have to eat, they gotta live. They gotta survive, we just can't all just pack up and go to the trailer park. Thank you.
Thank you.
For the record, can we have your name and address?
Debbie Crochet, 13746 Memory Lane Drive. And I don't know why I'm zoned commercial residential, because truly, I mean, I don't care if I have a sign, I don't care about any of it. Just because I'm a legal business person, I just don't see why I get to pay more because I do things the right way. I still pay sales tax, I gotta pay sales tax in January, 7.5875% or whatever it is. I do it every day.
Do you have a split classification then on your property? It's a home occupancy, is that correct then, or?
No, I got zoned residential
Okay.
commercial. And then, my deceased father, 2 years ago, I had his old spear house sitting on my property that I cannot move because I'm a single woman, and they have $100 on it. It's a spear house. It's not even actually squirrels live in it. It's not a shed, it's not anything. If anybody would like it, you are welcome to it, and then it'll take another $100 off of my, because it's not being used for anything. It's just, I don't get this.
Okay, thank you.
My name is Kate Greenwald, and my address is 14390 Shoreview Drive. And I am well aware, and I planned on it, that everything's going up. So when valuations came out, and I work in the industry, I knew that property values were going to go up, so I was prepared for that. But what I'm having trouble understanding is, in the increase, when I look at the comparison from last year to this year, the proposed increases, the county portion of it is like $60, the school district and other entities, I'm talking increase. But the city of Baxter portion, which I know this is gonna be less now than what came out on these, is almost $500. So the city of Baxter, you look at the county and the school district, their increases are here, but the city of Baxter is way up here for their increase. And I guess I'm having trouble grasping that. I realize that, it costs money to run government. And I know that the school district their costs have gone up, so has the county costs. But in the city of Baxter, it's kind of hard for me to understand how that increase can be basically, of my increase, 78% is the Baxter part of it. So that's what I struggle with. And then the information, Brad, too, that you gave, or Jeremy, excuse me, was very good. But it concerns me too, because when I look at this tax increase, you also mentioned city sewer and water rates are gonna go up, well, I'd understand that because I know the costs for the government is there too, so it gets passed on to the taxpayer. But, I'm a little upset at the, and I don't know if anything can happen here, but when I see commercial rates being changed and going downward, and then it gets passed on to the residential, that bothers me. Because you talked about the lodging tax, and 95% of it, that is, you collect that dollar amount, but 95% is given back to them for advertising. I mean, that was one of the things, did I misunderstand that? And then the airport, we paid 20% back for that.
With the lodging tax, by state statute, cities can impose up to a 3% lodging tax on your stays at a hotel. Those funds are required by state statute to be utilized for marketing purposes. So the city of Baxter utilizes the Visit Brainerd, along with the city of Brainerd, to market the hotels and the area. So it's not something that we utilize for anything other than marketing purposes under state statute with regard to the lodging tax part of it.
Why are we paying for any lodging? I go to air shows.
Well, you don't pay for it unless you stay in a hotel in Baxter,
Right.
then you would pay 3%.
But it's just that revenue collected actually.
Right, it's a pass-through for the most
For
part, yes.
the organizations came to us
Mhm.
and asked us, we'd like to do more advertising, but they needed a conduit, if you will.
Right.
So it's our tax, we'll charge people 3% if you'll monitor it, and we get, what do we get, 10% for doing it or something like that?
We
So it's their tax, it has nothing to do with us, and we make a good mark.
Yeah. But anyhow, just hearing that, you
Yeah.
know, it goes back like that. And, you know, the fact that the commercial is given a break and it's being passed on to the
Yeah.
residential. There's no hiding it or disguising that at all. But I guess my big concern is why is the increase for Baxter so significantly higher than it is for the school district and the county? Those amounts were within reason, I felt, but I just look at the Baxter portion of it and it's like, oh my gosh. I'm having trouble with that.
Okay, thank you.
And then knowing that the, you know, sewer and water rates are gonna go up too, I mean, it's like, it's making, it does make it harder for you to feel good about putting in Baxter when this is happening, so.
Yeah, I just want to speak to a couple items you asked about. And one was the fact that we were paying part of our sales tax to run water and sewer out to the Brainerd Airport. That was a last minute deal to get the sales tax run through. Remember, we had a sales tax and we went for an extension. And in order to get that extension through, that's what it took to show that that sales tax was a community regional, I think was the right word, right? That the legislature said it had to be regional. It just couldn't be our city. And then you talk about, I don't think commercial's getting a break. But here's how it's figured. The values of those properties have changed. So over the course of COVID, all of our houses went up in value because prices of houses went up, because we weren't building as many houses. That's nothing any of us could do about that. The same thing happened in reverse on commercial. I mean, the last story I heard out of the cities was 25% of the office space in the cities is vacant right now. What do you think that did for tax values? So that same thing to a smaller degree has happened here in Baxter. The value of our commercial property went down. We don't get to set that. That's set through the county, that's set through sales, that's set through the economy. And we're kind of stuck with this bad situation. As far as why it looks like the city is paying a higher increase, it's because our costs are spread over a lot smaller group of people. Whereas the county and the school, county spread over the whole county, the school district, their increase is spread over the entire school district. So that has a lot to do with why it looks like we're so much higher. I apologize, but we don't set those values. I mean, we're all experiencing it, same as you are, but the price in providing the services to you is going up. So our only option is not to provide the services to you if we want to keep the costs down. Evan, to keep my wants that.
That's where I am.
So it's a balancing act. If we keep our services where we're at, it's gonna cost more money. If we lower the services, we can lower the taxes. But, you know, we're gonna have people coming to us saying, how come the roads don't work? How come the parks don't work? How come, you know, everything. So it's a balancing act, and we're trying our best to balance it.
Jeremy, in addition to market value going down on commercial, was there a change in the formula too, or is it all value?
There weren't any changes in the classification formula. As Councilman Cross did point out, commercial does pay a higher tax because, as I shown in those illustrations, their valuations are based on the first 150,000 is at 1.5% versus the 1%. So they're initially paying a larger tax. It's just that their valuations are not going up as much. And I suspect what's happening specifically in the city of Baxter is because we have such a higher level of concentration of commercial, because that impact is being seen more than it is being seen in the county or the school district, because there's a lot more residential homes, a lot more other properties to be valued that spread that out a little bit more too. So that didn't change. One of the other things, I guess, too, is that, you know, there was discussions in the legislature last year to increase that market value exclusion too, because that's been in place since 2012. They haven't adjusted that since 2012. We all know valuations have gone up, specifically this year significantly more, but they've gone up since 2012. That number formula has not been updated since then. They have looked at that, but unfortunately they didn't pass the tax bill last year, so nothing got done to change that. So hopefully there will be some changes, I guess, that we'll see in 2023 here, but it might be, it's obviously going to be too late for the 2023 taxes. I guess on that note, I would point out too that, you know, it's important to kind of look at too, if you haven't qualified in the past for the property tax refunds that the state offers, certainly look at that in March or April when you do your income taxes. On the Minnesota Department of Revenue website, you can do it online right there for free. You just need your current tax statement, so you typically have to wait till about March or April to do that. But you can be eligible for a refund based on, there's two different programs. One is just on your ability to pay, so that's based on your income as well as your taxes. But the second one is a special property tax refund, and that's based currently on if you have a property tax increase of 12% or greater, that there's eligibility requirements there too. So that's something that, you know, certainly residents may be able to take advantage of as well. Those refunds then are made by the state directly to you in August of each year. So that's something that's maybe if you didn't qualify in the past, you wouldn't based on even just the special refund this year.
And Jeremy, I think someone asked why Baxter doesn't get any aid from the state. Can you explain that in those simple terms?
Sure. I only was here for 1 or 2 years when we had local government aid, so it goes back quite a bit. But it's based on a formula that kind of looks at a regional center. We haven't qualified as a regional center partly because of our income levels that we have, household income level. There's a number of factors that are built into that formula. One of the factors was your pre-1940 housing stock, which, as you know, we probably don't have very many houses that were built before 1940 in the city. It has to do with traffic, accident data, a number of things, but there's a certain threshold that you have to meet to receive that. So that's not something we've been eligible for since about 2003 when it comes to the local government aid component of that, where, you know, some regional centers certainly are getting millions of dollars that they're utilizing for that. And, you know, it's potentially just a flaw in the system too, a little bit of editorial, I guess, on my part, but, you know, we all still provide for police and fire protection, street plowing, maintenance, things like that, that's not available for all cities. But
And then one other question, the cities around Baxter do qualify for state aid, correct?
the city of Brainerd does have local government aid. I believe Crosby and Ironton do. I don't know that Nisswa or Cross Lake do, but yeah, there's other cities in certainly the area
exemption, there have been efforts to try to make changes to the formula to allow for government aid to be spread across to more communities similar to Baxter, but that has, there's been no changes to the formula to date.
Is this something that you apply for?
No, it's based on a formula, like I said, one of the factors is your pre-1940 housing stock, your number of traffic accidents. It's something the Department of Revenue calculates each year.
And income as well.
My term is convoluted. It's a convoluted formula that, it's uses
So it's your change in commercial valuations. things like that.
And Cross Lake, the ones I just listed, Cross Lake and Nisswa and us were considered too wealthy, and so we're just discounted. We can't even, most grants we can't even qualify for because they don't look at the individual, they look at the median income, and it immediately sticks it to the people that aren't at that median, and so it's been very, very frustrating, I'm sorry.
Is there any way I can have my evaluation change to a home occupation versus residential commercial, or residential commercial?
Yeah, that's a county question. The assessor's office does classifications, give them a call.
Well, and it's not only that, the question in regards to the two floodplain, those two things stood out to me that I will reach out to you in the next week or so to just get a better understanding of your statement. And because, the FEMA flood map is already established, and I don't recall that area of memory with being in the floodplain, but I could be wrong, but I do want to
That's my
talk to,
mother-
I want to talk to you offline in regards to that. Just
That's my mother's house, and she doubled this year, and like I said, she's 92 years old, and she's been in her home her whole life for 55 years, and she's right next door to me on Memorywood Drive. And I grew up there, and it was never a floodplain for all those years, and there used to be, wild rice out front, and ducks, and it looked like a swamp, and, now it's all 100 feet of sugar sand or whatever underneath all the water, but I'm just saying, she's never flooded, and then all of a sudden, it changed for whatever reason, and then, of course, that affects your sale and your insurance and, everything else too, so we'll talk. Yeah. Thank you.
My name is Paul Straka, 12936 Norwood, Baxter. I just have a couple of questions on the evaluations. I know it's really out of your control, but when you think about 2008, when the housing went bust, and it's going to happen again, sooner or later, it can't keep escalating, or nobody can be in their houses. What's your plan when, my house is back to what it was from 2008 toward 2010, 2012? If you're relying on the residential now, and the commercial is still depressed, that only leaves the room for you guys to, decrease your budgets, not plan things, because, you have to run it like we run our checkbooks. If the money's not there, I can't buy it. You can't go on with your pet projects. I mean, beautiful parks, it's wonderful, all the trails are great, but it comes to a certain point where there's a breaking point where it's not sustainable if you're not increasing our taxes or commercial taxes to, what are you going to do when the property value drops $200,000? Where is that money going to come from? Where is that increment going to come from? Are you guys going to keep it up? But you can't because the property taxes will be dropped. So where's the money going to come from? I mean, I don't understand this reasoning from raising everybody's, the average here is $200,000 or $300,000. If that goes away in 4 years, where's the money going to come from? Especially if the commercial market remains. No, I don't understand. You can't. It's not sustainable, is it? I don't know. I'm not in business. I'm not in the city council business, so I have no idea. We're on Lower Drive. We not only have this to deal with next year, we have a $10,000 probably increase, or just for assessments next year. So now you're talking on top of this, another $10,000 to have a street done in front of your house. So in mine is part of it's going to be ADA approved. So we've been through this before. It makes no sense to me budget-wise. I realize things have to be done, but a city should be no different than the local people that are my checkbooks. If you have the money, you do it. You can't just don't have empty, deep pockets where you can. It all comes out of us. Eventually, it comes out of us. It does. That's my only question is, there's gonna be 2008, and I wanna see my property value go down another $250,000. And that's gonna put a real line on your budgets. It really is. So, thank you very
That's a
much.
good question. I don't have a crystal ball. I know the answer to that.
I understand.
I know that if we all dropped $200,000, we'll all be in the same boat, and we'll be battling and bailing.
I hope so, but it doesn't seem that that's what happens. It seems
Yeah,
like-
that's a good question.
It seems like everything, what you guys do continues on.
Sure.
Everything's the same, you have more parks, you have more, you know, it just, things happen. Baxter's a beautiful city, but I'm sure you know the name, I'm sure you know the nickname. Baxter, and that's what I hear from everyone. I don't plan on moving, but I'll tell you one thing, I had a chance of buying my in-laws place on South Perch Lake, I wouldn't touch it, you know why? I did my house in Baxter myself. I will not remain in Baxter. I will love the city, love the location, but you guys are just killing us. You are, not you guys, I'm sorry.
Thank you.
Hello, Brian Ross, 14-3 Memberwood. Usually I'm up here in a different capacity, but I do want to provide a little information to the council, just so they get maybe another understanding. Some of them probably have their own understanding. Appreciate your efforts there, Jeremy, on that, and call me back and let me know that, and it makes sense, that residential's all going up and the industrial's going down. But, so with mine, this spring when I got my estimated market value, it went up 57%. Now, granted, it may have been a little bit low, but 57% was just outrageous. So I talked to the county and talked to Gary Griffin at the County Land Services Director and my board member too. And they said that, well, you're not gonna pay that much more. It'll spread out, you won't be paying that much more. And so, when I did get this statement, I was kind of shocked because mine had gone up $2,100, that's another monthly mortgage payment. So for the city of Baxter, it went up $54,000, or 54%, which is like $1,400. So just wanted to give you that information that, you know, it is kind of shocking. I don't know if there's any way council can cap that. I suppose there's not. But it's just really on an individual basis or an individual person, it's very difficult to kind of, wow, you know, $2,100. What am I going to do to get that to you know, pay for this? So I understand the challenges you guys have trying to balance it all, and you know, 7.1% seems reasonable for property tax as a whole. But then when mine goes up 54%, I'm thinking, God, somebody's getting a real big deal somewhere. But anyway, that's all I had. Appreciate the opportunity.
My name's Jim Janko. I live on 13565 Hollywood Drive. I've lived here about 30 years. Mainly one comment. Living here, driving around, paying attention, especially right across the street over here, I don't get the impression that this city is trying to save me my tax money at all. I see the expenditures, I see wasted money all the time. And I'm just wondering if anybody would care to comment on that. I'm talking mainly groundskeeping, the sides of the roads every spring, planting seeds and putting black dirt, and planting pine trees here over by Whipple Lake. And I don't know how many trees they replaced over there, but I think they replaced them here 3 times. Yeah. And I mean, it's just, to me, it's insane, because I've had to cut back on almost everything I do. My income's going down, that's not your fault. But even if my income wasn't going down, you know, with inflation and everything else, I mean, we gotta live in reality here. This isn't Disneyland. So, that's my comment.
Thank you.
I even think too, the police cars are running, you know, like I ride my bike through here to pay my little bills, and like, the police cars are running, and there's nobody in them, and it's like, man, gas, you know, it's now come down to $3.19, but you know, it was like $4 a gallon, I'm thinking, man, why don't they shut those cars off, you know, it's like, it just seems
They
wasteful.
gotta stay warm. I don't have a problem with that. They have to stay warm. We have a lot of equipment.
I mean, I was, you know, it's not in the
Yeah.
Hi, I'm Chuck Hiltner, 4614 Michelle Circle. I'd like to ask if anybody here understands the valuation shift that you talked about and how that's created. Darrell mentioned the county. If that's a county thing, I surely would have liked to seen a county guy here. Can anybody speak to that, how that's created? Like, how does my house go up $75,000 in a year when I haven't made any improvements? I realize that real estate market is at a bubble, which is probably gonna go down. And I think it has slowed down considerably already. People are paying outrageous prices for houses, and we all know that they're overpriced. So how should that affect me? Like I say, I haven't improved my place $75,000. If I'm paying because somebody doesn't understand the real estate market and pays over what they probably should have, that's, to me, besides the point. So, does anybody understand how the evaluations are created? Obviously, the county, and are you tied by what the county says, or does anybody understand how that valuation gets formulated?
So the county, the assessor's office puts the values on. The assessor does two things. They put the value on and they classify it. So what's the value, and is it your homestead, is it whatever, those two things. And that's done based on sales studies. So what happens is, everybody here got a notice in the spring that said, this is what we think your value is gonna be. And I did it for 25 years, so I know, they know what I'm talking about. So people will look at that, they'll look at that notice, and they'll say, yeah, the county's got 2 1/4 on it. Yeah, that's probably right. It goes on top of the refrigerator, and that's the end of it. The time for appeal comes and goes. Then when the tax statement comes, people open the tax statement, they go, holy moly, 2 1/4 can't be right. You know, either it was or it wasn't. And so the time of it is so important to act when that notice comes out and gives you the dates of your meetings. That's your time. That's your time to appeal that. If you don't appeal it, people don't appeal. The county, whoever decides, okay, they must agree with that, and it becomes in stone. And then later on, the tax statement comes along with that. So I don't know if that answers your question or not, but those things come out in the spring. They've made that determination based on their sales study. So you go up to the counter and say, I'd like to speak to the Brainerd, excuse me, in this case, the Baxter appraiser. And then their obligation is to bring out their sales studies and show you similar properties to yours that will justify what they do.
So is that one man's opinion?
It's based on sales. It's based on
It's based on actual
Actual
sales.
sales?
Yeah.
Sales of
Sales
comparable to
of-
my house?
That's correct. Similar, so you're not gonna be compared to Gull Lake or Birch Lake, right? But you're gonna be compared to.
It is more complex, they have different, it feels like a shell game. I went in and negotiated on mine, was able to bring mine down, but it's, yeah, they use different, and it shifts. We're on the river, so that changed different than the lake, you know, and just bare property, and so there's a whole, yeah, it's not easy.
But yours is pretty easy. In a residential area, there's a lot of comps in that particular situation. Comparing to Lake Shore or rivers, yeah, it's a different story. But
So they're not comparing my house to a $400,000 house
That's
that's
correct.
down the street?
No, that's
Is that
correct.
what you're saying?
That's correct.
Comparable home, 3-bedroom, 2-bath.
Right.
I made that complaint myself because I thought mine was outrageous, and they sent me the properties in my neighborhood, and somebody paid that outrageous price, and they said, good luck, you know, you can come complain, but this is what we're gonna show you again.
And your shift from residential to commercial in cities happened because the comps for commercial went down.
Is there some state influence on that?
well, the state sets the guidelines. You have to be the assessor has to be at a minimum of 95% of what that sold for, or a maximum of 105, anything in between there. So if you sold your house for 100,000 and they had 95 on it, they'd be okay. But if they had 90, the state would throw that out. And if you use 5 sales, the whole city of Baxter would get an increase.
Okay. Okay, great, thank you.
Good questions, though.
Hi, my name is Karen Abram. I live at 14750 Nyhart Drive. And I'm pretty new to this area. I just moved up here a year ago.
Have you checked with the county? Because I think there are programs that do defer or reduce property taxes, I guess, potentially for those situations. So it's something you might want to check with the County Land Services Department.
Okay, thank you.
Anybody else? Somebody asked a question about the, maybe it's Lauren, I don't know about the formula for LGA. And I haven't checked recently, but 3 or 4 years ago, I checked and the county was getting $3 million of LGA, so it's never an even playing field for us. You know, we're really on our own. You know, that's not, do you want something here?
No, I guess.
Okay.
So the LGA formula, the market value formula, a lot of that also comes from the state. And what happens at the state level, let's just talk LGA, is when the budget is approved at the state level, there's a pot of money, specific pot of money, that is for LGA and can only be used for LGA. And so when it comes to, so they make the formula, and they made the formula years ago. When they make the formula, those cities that qualify share that pot. So when you try to make a formula change with LGA, you're asking some of them to, okay, there's this pot, and we're not gonna raise the pot, there's so much money. So you're saying to the folks that are getting it, give a little of yours for us. You know how hard that is at the state legislature to try to do that? Oh, I do, because we tried to do that, because we knew that Baxter didn't have LGA, but Brainerd does and other areas here do. And so, same with market value, they changed that, Jeremy, when was it, 2012?
Right.
2012, that came out of the state. So, you know, I just wanted to point that out. You know, everybody has, in my opinion, you know, everybody within government and citizens have ownership in, from the state level, down to the county level, down to the local level. And, you know, as Councilperson Licio said recently at a public hearing, these are some of the toughest meetings that we have to have. And we try to do the best job we can with what we have as well. But we do appreciate your input is important. But we also try to give you the information so that you know where we stand too when you're up in these shoes up here. And so part of our situation comes from the the state and the county, as was already suggested. So I just wanted to try to bring even the airport. The airport. I was involved with that when I was in the state legislature, and that was a deal. That was a compromise between Baxter and Brainerd in order to get a public safety issue at the airport taken care of, but to make sure that Baxter and Brainerd both were not going to be hurt. And at that point, the compromise was good for everybody, and I think it still is, quite frankly. But
I think it should be noted too is that with that compromise, the amount of sales tax that was being requested by the city didn't get altered. The cost of the infrastructure to the airport got added to the amount of the sales tax, so there wasn't anything that was taken away from the city of Baxter with that compromise.
And Arena, I understood because I was a public school teacher, Baxter Elementary, for the last half of my career. And it would be frustrating because with the LGA, local government aid, Baxter School and Nisswa School did not get the aid that the other elementary schools did. So we didn't have the free and reduced lunches that the other schools got to benefit from. We didn't have the teaching assistants that the other schools benefited from. And I thought, how unfair is that? It went back to income levels. So I understand the frustration, and it makes you feel any better. My husband jumps on me about property taxes as well, so we're all on the same rule.
One other point that I think is just worthy of sharing, because I've got my emails from the week available here, that to the question about trying to save money is over the last several months, we have made cuts, and One of the things that I was a little surprised about was staff came to us saying, you know, the appropriate cut parks-wise was we have a duplicated skating rink at Oscar Christopherson Park, and they showed us good numbers to justify no longer using that rink, so we shut it down. And I had 6 emails saying that taxes are too high and you should continue to have that facility for us. So it makes it difficult because that was something that appeared to be on paper a wise financial decision, and it isn't popular with a slice of the population. So we kind of run into that too, where we're trying, and you're definitely justified in saying, you know, things went up a lot, they did, and we're in that same boat. But if there's reasonable cuts that the public wants, I think everybody here has worked pretty hard to make sure that we're doing our best that way.
Yeah, the only people with extra money right now is state government. So they're the people that we should be talking to.
And they can't get along long enough to spend it.
Why do we have, just take the grader, see we have 350, and I know that the grader is more than the, whatever, the 350 that we have budgeted for this year, because it's continued, but why do we have a grader when we don't have any dirt roads?
We use it to take the ice off the roads as well. They use it to grade ditches. There are uses for it.
It's the big scraper in the winter for ice, and there's other reasons too.
Yeah, using truck.
When we get that 2 inches on the road, that gets packed down, that wet stuff that gets packed down, that's the whole thing will take it off. Otherwise, you're driving on it for the entire winter. And then we get complaints that all roads are really bumpy because we've got 2 inches of ice on them. So
Those trucks will take that off.
They won't.
Yes, they will. They'll take off, even the hard stuff. The big trucks that you have, yes, they will. They'll take it off.
Can we get that grader on my street?
Somebody else have their hand up?
Hold us all.
All good comments.
I have a question now. The rate that came out on these proposed amounts was at, what, 9 point? Yeah, and now it's gonna be 7.1, so that will make it a little better. Because of the increase in values, do we need to have that high of a rate? I mean, I know when you look at it, I mean, everybody that talks, their values were increased significantly. So was there really a need to have a 7% rate? If you just applied the rate we had last year, which was what? I don't know what the rate was last year.
The tax rate was actually higher last year because what's happening is the base is going up. So, you know, of the general fund increases, which is where the actual levy is comprised of mainly, over 80% of the costs are between streets and police. So that's just based on what I mentioned earlier, some of the higher inflationary costs that are occurring, as we all face in the economy right now with contracted services, materials, shipping costs, fuel, things like that. So that's where the increase is occurring right now.
My only comment is we did call on the value of our house, how much it went up. And when we called, they're like, we won't even see a difference in your taxes because everybody's value went up so much. That's not you guys, it was just the person at the Land Services Center said that. And it was a bad comment to make because he was very wrong. Our taxes went up 36 point, what percent? over 36%. So, I mean, it was a poor comment for that particular person to make. Nothing to do with you guys, but it was something that should not have been stated.
Jeremy, what was the average residential increase?
Yeah, when we looked at the overall increases that were occurring from what was calculated at the end of last year to what was set at the preliminary amount in the spring when the county does the calculations. Residential, on average, the overall amount went up about 32%. So that's kind of what's happening. Everyone's valuations went up 32%. Then really your increase would just be what our increase in the levy is. But it's because it's disproportionately going up for some people more than 30% and some people less.
Yeah, 30% is the average, and we have some people in here at 100. Then there's a lot of people out there that didn't come to this meeting because it didn't go up. Like,
Right.
some
Yeah.
said.
Yeah, it goes back to what Brian had kind of said, some people are probably doing pretty well.
Unfortunately, it's not straight across the board.
Right, yeah, it was just, when your value goes up 50%, I knew our taxes were gonna go up. But I thought, well, maybe it will, level the playing field, because you do have a bigger pot of money. When you value everybody's property that much higher, your pot of money, as we could see on the pie chart there, went up a lot. So I was hoping maybe.
The biggest thing was if commercial had gone up 32% also,
Yeah.
all the residential wouldn't have gone up as, we all would have gone up together
Yeah.
as opposed to
Do
the
you
difference.
think with all the new infrastructure coming into town, like, you would think that there's a lot of businesses coming in, it's kind of the medical mecca over here. You would think that their amount that they pay would help bring, residential taxes down some, because they do pay a lot in taxes. So at some point in time, it should even out, I would hope, or bring taxes down a little bit for residential. There's just a lot of commercial coming in.
I think it just goes back to what Councilmember Cross said a little bit earlier too, some of the things in the economy are just shifting too. People are working from home and, commercial isn't maybe as used as much too, so it's a question of how that's gonna pan out, I guess, for all of us, City, county, or city, the state.
Yeah, I still have employees, all my employees are working from home 3 days a week and at the office 2 days a week. And that, I work for the state and the state's not gonna change. It doesn't affect the state's real estate value. But if that same thing holds true in all the retail offices across the state, that's what's really thrown the crux in the whole real estate market when it comes to commercial. That's valuable. Except for maybe your haircutting salon.
It's not bad, because I'm serious, I pay more because I'm residential commercial, and these people that are working from home I would love their incomes, truly. I can only cut so much hair, that's it. So, it's so wicky-wacky, the whole thing. And my mother's house next door doubled, at 92 years old, it's like doubled, or, it's like, you're on fixed income, what do they think people are gonna do?
And another thing for Dee's situation too is, she's got that commercial classification, which seems unreasonable because she's a one-person show. So it's one client at a time coming to her house. She's not, using facilities for like a parking lot and things like that. I mean, somebody working from home isn't paying to work from home. She works from home.
It's closed for 3 months.
Yeah,
Closed down.
yeah,
I couldn't
so,
be any more socially distanced.
that one does make sense.
That's it. And I was closed for 3 months.
I mean, it's not like multiple people are coming to her house and, there's a lot of hubbub because she's got a commercial, so-called commercial business. It doesn't make sense. But that's something she has to take up with the county.
That's why I was curious, because if she had a split class, I'd be interested to see the commercial went down.
Yeah.
Your tax data, but you're saying it's not anyway, so. Anybody else? Some of the other questions, Council? Anything Brad to add or?
You want to summarize the next steps again?
So the next steps in the process would be adoption of the final levy and budget, and that's scheduled for our council meeting tomorrow night at 7 p.m. just need to close the public hearing and then we're done.
A motion to close the public hearing. Motion by Ward,
Second.
second by Ted. Any further discussion? All in favor, say aye. Motion. Ross?
Second.
Favor?
Aye.
Thanks for coming.
Yeah.